Welcome everyone to Verve Group's fifth video in our little series. I'm Matt Carberry, one of the directors of Verve Group, and no, I'm not sitting in New York, but we thought we'd spruce up our videos. I've got our tax director with us, Mr. Mark Loader. How are you, Mark?
I'm very well, Matt. Thank you for having me. And yes, I'm not also at Uluru, but just thought, again, we're mixing it up.
Yeah. Easter time's coming up, we can't travel, but at least we can think about these places. But yes, all good fun. The last couple of days has been a lot of developments. Obviously, rent relief is one we want to talk about today, and also the JobKeeper that was passed yesterday. So we thought that was fresh on everyone's mind. And obviously, our tax director here, Mr. Loader, I'll hand over to him and he can have a chat about rent relief. So I'm sure there's some burning questions everyone's got about this. So over to you, Mark.
Thank you, Matt. Yes, this came into effect this week, or on the 4th of April. So it's basically going to be, affected through the relevant state and territory legislation. So it is a code of conduct, but it will become law. And so it is something that we all need to, if you're a landlord or a tenant in a commercial sense, we'll have to abide by these rules. So what it has done, it's given us a framework for landlords and tenants to work with. Prior to this code of conduct, landlords and tenants were just going off and trying to negotiate their own deals. Some were ending well, some were ending very poorly because there was this lack of framework. But now this framework's come into place, we all know what the rules are in relation to rent relief and coronavirus. So included in this code of conduct, there's 11 overarching principles and there are 14 leasing principles. We will put up the code of conduct so that people can download this. So there'll be a link to the actual code of conduct, and people will be able to read the code of conduct for themselves. So it's quite extensive, but yeah, I encourage all landlords and tenants to have a read, so that when you do come together, you've got that framework in your back pocket, so to speak. One of the major principles in this is that tenants need to show financial stress or hardship in order to be eligible for this rent relief. Now, if you're a business and you're applying for JobKeeper and you are an eligible employer under the JobKeeper scheme, then you're automatically considered to be under financial stress or hardship. So if you satisfy that 30% rule, if you're a small business, or 50% if you're a larger business, and 15% for charities, then that makes you eligible for JobKeeper. Then you automatically have shown that you're under financial stress or hardship. I guess one of the overarching principles, this rent relief code of conduct is designed to keep landlords and tenants talking. Much like the JobKeeper, you hear Josh Frydenberg say that JobKeeper is to keep employees and employers connected. This code of conduct is similar in that it's designed to keep tenants and landlords connected, gives them a framework to have conversations, and essentially it's all about assisting businesses to survive, so that at the end of this crisis, landlords have got tenants that can return to normal, and the tenants have the comfort of knowing that that there is still a place to conduct their business via the commercial premises. So yeah, it's about the two parties coming together and working with each other and helping the business to survive, and also keeping the landlord's interests in mind as well. So it's very comprehensive, and I do encourage everyone to have a read of the conduct, which we will put up on the various medias.
So Mark, so just for an example, a practical example for people out there. So if I'm a business, I've triggered eligibility for JobKeeper, and my revenue's dropped 100%. I'm earning nothing, and I'm paying 10 grand a month. How does this work? How does this apply to myself?
Yeah, good question, Matt. Thank you. So yeah, if your turnover, because basically you're one of those businesses that's been shut down, then and your revenue has reduced to zero, so you've had 100% reduction in your rent, then you are entitled to 100% reduction in your rent. But it's split over two parts. So there's the rent waiver and there's the rent deferral. So 100% decline in turnover, 100% decline in rent. In one of the 14 leasing principles, 50%, or at least 50% of that reduction must be by a waiver. So if your rent was $10,000 a month, the rent waiver must be 50% of the 100% reduction, which is $5,000. So now that's not to say that it only has to be 5,000; it's at least. So it could be more than the 50%. So it could be, in theory, it could be 100%, but it must be at least 50%. Now, if you agree on the 50% waiver, then the other 50% is a deferral. So the $5,000 that's left over is deferred until the end of this period, and then that is paid to the landlord over the remaining term of the lease, or no less than 24 months. So you will get some time to pay the deferred amount once we come out of this period, which is the 27th of September, which is in line with the JobKeeper program. So this rent relief goes over the same period of time as JobKeeper.
Beautiful. Explains it perfectly. Thank you, Mark. So obviously the big one, JobKeeper. So can you give us a rundown on that? And I'm sure I'll have a few questions along the way as well.
Yes. So late last night, the Senate passed the legislation. So yes, it's now through both houses of Parliament, the House of Reps and the Senate. So JobKeeper is now law, and as I said in my previous slide, this JobKeeper is designed to keep that connection between the employer and the employee. And essentially, what we're hoping is that when the crisis is over and businesses are returning to normal or the new normal, then they have their employees on the books and they can be mobilised quickly. If they've been stood down, they can come back to work, and businesses can resume trading as quickly as possible. So yeah, I agree that it's important to keep that connection between the employers and the employees, and that's exactly what this is designed to do. And Josh Freiberg, our treasurer, has mentioned that on a number of occasions. So I guess if you in our last video we mentioned that if you haven't registered, please do so. So in the media this morning, there was some 730,000 businesses that had registered. And so if you have one of those employers that has registered, what's the next step? So the next step is the online application. Now we haven't seen those yet, although given that Parliament only passed the legislation last night, so I would just keep an eye on your inbox, because when you registered, you gave the ATO your email address. And so I'm imagining that there would be an email coming to your inbox very soon about how encouraging you to lodge your online applications. So my advice there is keep an eye on your inbox, and also it may go to your trash folder, so keep an eye on that too in case it's gone there.
So the other one, Mark, there's a lot of questions we're getting from clients coming in is obviously an employee revenue drops, how it works with an employee, but obviously self-employed or businesses are run through trusts where business owners take a distribution or a partnership where they split the money out. They're not a direct employee. How does it work for those businesses?
Yeah, thanks, Matt. I mean, that's been a very common question. You know, I'm a beneficiary of a trust. I don't take a wage, but I take a distribution, or I'm a partner in a partnership, or I'm a director of a company and I just take a director's fee. You know, how does that work for me? So, that has been answered. So essentially, if you're a partner in a partnership and there was two of you, there's two partners, then only one partner is eligible for the JobKeeper. And when you lodge your application, you will nominate, even though you don't have any employees, although if you're a partnership and you do have employees, they will be included. But if you don't have any employees, you then nominate one of the partners and supply the tax file number of that partner. Likewise, if you're a mum and dad director, you're both directors of a company, haven't drawn a wage, just a director's fee perhaps, then again you nominate one of the directors and provide the tax file number. Similarly, beneficiaries of trusts, this excludes, you can't get JobKeeper for a corporate beneficiary, but if you've got several beneficiaries then who are receiving trust distributions as opposed to a wage, then that you nominate one beneficiary to receive the JobKeeper. And the same goes for shareholders. If you're a shareholder and you typically just take a dividend, then one of the shareholders can be nominated as well. So if you're partner, partnership, beneficiary of trust, director of a company or a shareholder of a company, then you can just nominate only one to receive the JobKeeper.
Beautiful, beautiful. And the other one which is with this turnover question, where saying to me, you look back 12 months, how does that actually work? Say at the moment my turnover hasn't dropped, but it drops in May, then picks up again in June, drops again in July. How does that practically work?
Yeah. So firstly, you in this JobKeeper program, you account for your turnover in the same way that you account for your turnover with your BAS statements. So for GST purposes, if you're cash, you look at your turnover on a cash basis, and if you're for GST purposes, your accrual, you do the same for the JobKeeper program. So you compare your turnover on a month-by-month basis this year to the same month last year, and you lodge once you've applied to the ATO and you are an eligible employer, you need to lodge every month, and you need to make a declaration every month that your turnover has dropped by that at least that 30%. So there'll be for some employers, they will be eligible one month but not eligible the next, and vice versa. So it's a month-by-month process. You could be eligible some months, but not eligible in others. One other frequently asked question I get is about if I'm on parental leave. That one is reasonably straightforward. You're not eligible for JobKeeper, and so if any employers have people on parental leave, then they don't fall under the JobKeeper program. And another one I get asked a lot about is superannuation. So we've said in a number of videos prior to this, keep up to date with your super. You must pay your super to your employees. Now, there'll be some of your employees that wouldn't normally receive the full $1,500 a fortnight. So if you have an employee that normally earns $1,000 a fortnight, they will still receive the $1,500 from the JobKeeper, and as the employer, you must pass on the $1,500. But they're getting basically an extra $500 a fortnight. Now the super on that extra $500 is optional. Employers can pay the super on that extra $500 or choose not to. It is entirely up to the employer.
Beautiful.
Now the other thing, just lastly on this, it is paid to employees that were on the books as at March 2020. So if you've employed someone since the 1st of March, they won't be eligible for JobKeeper payments. So it's only employees that you had on your books 1 March. Even though the JobKeeper program doesn't start until the 30th of March. The program starts on the 30th, but if you employed someone on the 15th of March, they won't be eligible.
Beautiful, super informative as always, Mark. So that's a rundown on our JobKeeper and the rent relief out there. So to everyone, have a great Easter. Spend time obviously with loved ones. Enjoy it. It's going to be a different Easter for a lot of us, but always look on the bright side. So any questions, come back to us, and everyone have a great day. See you later.
Thanks, Matt, and thanks everyone. Have a good Easter.